but we're going to wrap.
Money in the bank.
Rates are good. Pretty exciting.
You know what? Right.
Free money. You understand what I'm saying?
Welcome back. Thanks for staying with us. A Money Talk segment of the program. Kelvin Kaemingk, ladies and gentlemen. Loan Depot, 651-231-2500 is the hotline to call. Get that great home loan for your new property.
Mm-hmm.
Morning.
Good morning. So last week we talked about how this last week was going to be a big week. We'd see rates drop back down into the fours. And
yes, that's right.
So May 10th, May 10th has come and gone, and rates are lower, little bit.
Well, how much lower?
Not much.
No,
not much.
High sixes, low sevens.
No.
Higher.
Well, we're mid sixes yet. But the cost. So here's the thing. So the CPI came out. That was what everybody was.
Now comes the excuse making.
It wasn't.
Go ahead.
Well, no, you know what was funny? I'm listening to Barry Habib. Is kind of like the author of our. Yep, he's a guru, and he comes on the day before on the 9th and goes, "All right, guys, just want to be up front with you. Here's some things we're seeing." I'm like, God, I'm just going to get roasted on Friday when I say, "Well, Barry said,"
Yeah.
But there was the CPI numbers came out. They were good, but not as good as they hoped, but good. And when you look year over year now, inflation is down. You take out shelter, nobody cares that's listening. But the numbers did look like inflation's a lot better, right? Hopefully driving rates down. And it did drive the cost of the rates down. So one of the things I was reading this morning was just about the fact that it just costs less for that same rate. So right now, if you're saying, hey, I need a 6.25% rate, like, great, that's going to cost 1.25.
Mm-hmm.
Well, now that might cost a point.
Okay.
Does that make sense?
Yeah.
So the cost of that same rate is lower than it was, and then I think we'll start to see that trend start.
What's the diminishing return on that, Kelvin? What is the most you can buy down until at some point, no matter how much money you throw at it, it's just not going to go any lower?
Yeah. Well, our charts go forever down. Okay. So if you want a 3.5% rate, you can, but it's going to cost you, $27,000. I mean, it just makes no sense.
Right.
All we do in that case is we take the cost, divide by the savings, and tell you, hey, this is how many years it's going to take you to break even on that. And it seems to make sense in the short term, and sometimes just to even get the rate when you're looking at some FHA loans and stuff like that. A lot of them just have a cost regardless of where that rate is.
Mm-hmm.
So we figure it out, but you're not going to probably pay more than a point. I have one that we're doing 1.25 right now, just to kind of get it where they're so driven by the monthly outlay that piece they had covered, and we had some seller pay. It worked out well.
Right.
What was kind of cool in that case, just as a side note, is the appraisal came in higher than the sales price, so multiple offers,
mm-hmm.
and we still came in $6,000 more than what
the sale price.
What the sale price was. So now what we did, they were short cash. I'm like, great. So we changed the sales price up, use those additional dollars now for seller paid closing costs,
and relieve some $6,000 free.
Bingo. Yep.
Mm-hmm.
So it was kind of a cool deal. I'm like, that's great. That was
putting things together.
Yep. So the CPI did help us. We're seeing a little bit of a trend down. We like that, and now we're just hopefully on that. Hopefully we can just steadily get down, but.
I was looking at that interest or the inflation though, and the problem with that inflation number was some things were down significantly,
right?
But gas, food, and housing,
shelter,
were all up.
Yep.
So the real number was offset by those things that were lower.
Yep.
But gas, shelter, and food were up more than 4.5%.
Interesting, right?
The things that people actually pay for every day.
Right.
The necessities, day to day.
The day to day.
So so we always talk about in this segment, what problem did you solve? And I've got a couple problems we solved last week, but I'm curious, what did you solve last week?
I actually wrote it down because I knew you were going to ask me this. So buyer and seller expectation. I had an interesting conversation with a seller this week where we're getting his home ready to go on the market. And it's interesting because he's talked to buyers, and buyers actually feel like they've got some leverage here. And
hold on, you said buyers?
Buyers
kind
of feel like they have some leverage because they are qualified, and they can buy, and they're one of the few people out there, and they've heard the news that those nobody's buying because of the interest rates and all that, but here I am ready to buy. So, and they know that they're paying top dollar, they know that they're paying a high interest rate, so their expectations of what they're going to get is way up there. I mean, as far as they're being fussy about condition, and they're not willing to just take anything, let's just say. I mean, they want to have their inspections, they want to have that, they're going to ask for stuff. The flip side of that is the seller who's just come through 10 years literally of, I get whatever I want, I don't really have to fix anything, I don't really have to make any concessions. What's this inspection business? Nobody has inspections. I love that when people make these broad sweeping blankets.
Oh, I bet you do.
Nobody has these inspections anymore. It's like, I got news for you. Yes, they do. And so it's just that conversation to basically just make them aware of the changing dynamics, so that they don't lock themselves into a mindset of what's going to happen. And then it's preparing the home for sale, and yes, you actually do have to replace the carpet, and yes, you actually do have to paint.
Oh, can't we just give an allowance?
No, you can't give an allowance.
Do you still get that?
Yeah.
Yeah. Interesting.
So
what you solved was the expectation between buyer and seller.
So that they're looking at the market realistically, and not through rose-colored glasses, or through a prism that's 2 years old.
Okay.
And no longer serves them.
Interesting. Junior, what did you solve this week?
I had an issue with a past client in a divorce situation where they had no clue what the property was worth. They didn't know who was going to stay in the house, if they had to sell it to take care of other debts, and what was going to happen there. So part of working with folks through a divorce, and I do this quite a bit, is I'll get a call from them and say, hey, we're unfortunately getting a divorce and we're splitting. Just starting to talk with a mediator and how we're going to handle everything. We don't know what our house is worth, and so what I'll do, in some cases there's multiple pieces of real estate too, is provide nice reports and estimates for what the current value is.
Okay.
And then in addition to that, provide an estimate, like in this specific case, one of the people in the situation owned the property, then they met the person 10 years later, and then now they own the property for an additional 5 years after that.
Wow.
And so we need to know, what's the property worth today, what was the property worth 5 years ago when that one spouse came into the environment, into that home, and then there's premarital equity there that the one initial owner of the property can have. And so part of that process is doing a retrospective market analysis to the day that they own the property together, and then what the value is today, to help basically division of assets for that for the mediator or attorney and the husband and wife to work together and move forward. So ultimately, one's going to stay in the house. I'm going to help the other one buy a place, and problem solved.
Nice job.
Yeah.
So my problem this week that we solved was the fact that we talked about it last week a little bit, and I said we're in the midst of this one, and that was when had some clients that just kind of thought like, hey, that minimum payment on that credit card, I might break up that minimum payment over a couple months.
Right. Okay. Yeah.
Can't do that.
Yeah. Right.
Credit score drops by 101 points. And they were already coming in with a strong 664 score, so kind of a mid-credit anyway, and then dropped her to 560. So, and they were just devastated, right? It was just, you guys get this.
Yeah.
I mean, they already have when you get an accepted offer, you've bought that house.
Right, mentally.
Right? And now you're just waiting for me to do my thing, you guys do your thing, but they have mentally moved into that house, right? Man, just devastating. And 3 times, so we went down 3 different roads. They always say third time's a charm. It wasn't. 4th time was a charm, right? But we went through 3 scenarios on solving that. Couldn't get it. Finally, 4th time, got it. And we, what we did is we have a thing called a credit simulator where we'll go in and I just played with different scenarios. It cost them $781. Because they also didn't have the money just to throw a bunch of money at debt to change everything.
Right.
But we moved their score. I said, I need a minimum of a 580 score, and it gives us, different stuff. Moved up to a 629.
Nice.
So got that one done.
Nice.
Not done, but at least approvable now.
Right.
And now we're putting the rest of the pieces together. So it's kind of cool to see, and So that was one that I was just super happy. And
Now,
they're
if they
so
just don't
thankful.
step on anything on the way out the door.
Right? You just want to close that literally right now.
Yeah.
Like, come tomorrow, sign everything, you know. But they're clear, you know. So that was one that was fun to solve. And then we have another one that's in a Chapter 13 bankruptcy right now. They've had over 12 months of payments, and they're buying new construction. I talked to the lender it's one of these lenders that gives away money built in the price, blah, 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 right? But they don't
touch anything.
They're not going to touch anything like that.
Nothing that's got any hair on it at all.
Nope, not at all. So like, oh yeah, well, if you want to just kind of wrap that one up and take that one, we'll. Yeah, I'm like, oh, we'll take that all day.
Sure.
Right? That's a great loan, and these people deserve to get in there, and we're putting them in a lot better position. And so that's the one we did the cash flow analysis with and did all fun things. So
And you're going to make it work for them to continue on with their construction purchase, and
it's all done.
everything's hunky-dory.
Yeah, so rates are down a little bit. Not probably where we want to see them yet, but I think we're trending right. And I'd love to have the conversation. So give me a call at 651-231-2500. Let's have a conversation about your mortgage and your money.
Cool. If you're looking for any problem solved in your real estate and mortgage endeavors, please call us, 612-627-8000. That number again is 612-627-8000. We'd love to help. Or connect with us online, hittnergroup.com, HITTNER group.com, and we'll see you next week.
You've been listening to Your Real Estate Chalk Talk.